Hello dear traders, Dutch tulips will cost you more for the spring holidays this year. Canadian trackers are ruling and Wall Street investors are upset about soaring inflation. Let's discuss these issues and other news of the American session. We already told you yesterday that the US CPI jumped to 7.5% annually in January. The core CPI, excluding food and petrol, stayed flat at 6%. Both figures are the strongest since 1982. Investors got very upset that pushed stock indexes down. Market pessimism was triggered by the fact that the US Fed has now widely argument to raise interest rates as early as in March. The US stock market closed significantly lower. The Dow Jones lost 1.5%, the Nasdaq slumped 2.1%, and the S&P 500 shed 1.8% yesterday and another 0.9% in the early American session today. So analysts foresee a further slide in the stock market on Friday. Perhaps investors will cheer up following the next batch of corporate reports by top American companies. Coca-Cola's net profits increased by 26% for the year to $9.8 billion. Pepsi reported modest profit of 6%, estimated at $7.6 billion. And Twitter closed the last year in the red with losses of $220 million. Nevertheless, the dynamic of the S&P 500 reveals market pessimism. Futures on the index skidded to 4,504 points. The expected corridor is seen between 4,460 points and 4,560 points. The US dollar index closed yesterday with modest gains in the light of the fresh inflation report. Fed's policymaker James Bullard came up with his comments on further policy moves. Meanwhile, the Fed's officials are discussing not whether to raise interest rates, but how much. Most experts predict that the regulator will raise the official funds rate by 0.5% in March. Such prospects cement the US dollar strength and affect the euro. Yesterday, the euro made sharp price swings following the inflation data and eventually closed lower than it was before the publication. Market sentiment is still uncertain about the US dollar. At the moment, the overall trend is slightly bearish. Its index is trading at nearly 95.66 in the range between 95.60 and 96.20. The US dollar is holding the upper hand over its Canadian rival. The greenback is benefiting from rising yields of US treasuries. The yields of benchmark bonds surged to 2% for the first time in 2 years. Now the currency pair is poised to grow higher because the Canadian dollar is vulnerable to the rate hike in the United States. Now the pair is trading at about 1.2698. It's likely to trade in the corridor between 1.2692 and 1.2754. The civil clashes in Canada have not been settled yet. In January, truckers protesting against COVID mandates blocked the main gateway between the US and Canada. The unrest has spread over the other continents. Americans, auto giants such as Ford and General Motors had to suspend production facilities due to disruption in spare parts supplies and announce layoffs. In response, the US government appealed to Canada to exercise a federal authority to ensure a smooth flow of drugs. Bitcoin is also involved in the issue of the Canadian Convoy of Freedom. The fundraising activity collected $10 million for protesting truckers. However, the law enforcement authorities froze these funds. Then some Canadian crypto funds opposing financial censorship and restrictions launched fundraising in digital tokens. $4,877 donated to Bitcoin worth almost $700,000. The group also gained recognition from Elon Musk, who tweeted that Canadian truckers are ruling. On Thursday, Bitcoin in demand, they settled above $44,000. On Friday, the most popular crypto went downwards alongside the stock market. Today, Bitcoin is trading in the red at about 43,734, with the accusation efforts to grow. The technical picture reveals the uptrend. And that's all for today. Hopefully, our market reviews help to make your trading more efficient. We are waiting for your comments and questions, and have a nice weekend.